Welcome to the StockMentor.com studios. I am your stock mentor, Brian Johnson. Coming into a new week of trading. Welcome to the Sunday afternoon video. And got some new lines, got some new things to share with you. We saw pretty sizable run up by the bulls over the last couple weeks. You can see started here right around the, a sixth, maybe eighth, somewhere around in here. Big run up last week. We got a little move to the upside. Couple days of straight across, and then Friday, of course, everything came crashing back down and actually more than erased what was done all of last week by the bulls. Welcome to the bear market. And you can see where we came back to. Did a little work this weekend, and look at that. Isn't that convenient? Right back to a line of support. We're watching this one closely coming into the early part of the week. Is because, we're still working on exactly where we are. Are we just in a pullback before a move higher? Are we starting some new wave to the downside? Where are we at within the bigger scheme of things? And once again, as the markets are prone to do, leaving us kind of in an in-between type of a move. Still moving overall, especially if we look back at the last few months. Really just a sideways action here. But you can see what we're going to be watching coming into the beginning of the week, and that is any moves back below about that 10,000 mark is probably your first area to be looking at for a trade to the short side on the Dow. To the long side, got some work to do here by the bulls now. After that big move down, there was a lot of volume accompanying that. So any move back to the upside, I probably wouldn't be comfortable telling you to take anything until it got back above 10,250 and then really back above 10,400 after that for your entries into the market. Look at this. You can see I was able to put in a line after that big drop on Friday. Give me a look at that volume. That's huge, huge volume here on the move back down again. You can see what we did coming right back up into the 200-day moving average. All right, now we have a little bit of extra that we're going to have to look at, not only the 200, but now this overhead line of resistance. The 50 and the 20 now have all been broken to the downside. These things have been split like butter the last actually few attempts, whether you're moving up or whether you're moving down. The 50 and the 20 really haven't acted as anything too strong over the last week or so. So here it is, the big move. That was 1, 2, 3, 4, 5 candles erased, gone in one big candle on very large volume. So we will be watching once again that 10,000 area. And we get below that, guys, at 9,800. Maybe even back down to retest the lows here or potentially below that. The bulls are going to want to hold right in through here if at all possible. I'm saying 9,900 might be an area kind of at the lower end for me, for the bulls to want to hold and push this thing back up if they want any chance of getting back above all this area here. Now, can we look at a couple different things? Sure, we can try to make a inverse head and shoulders out of this. We can do all of that to the nth degree. The point here is waiting for these breaks are really where your trades are at. If you start looking at this as an inverse head and shoulders, guess what? You've already set in your mind that this thing's going to go up, and then you start to make mistakes. Don't get sucked into that. Okay? Don't get sucked into that. Let's just watch the charts and make sure they break the areas we're looking at before we take our trades. That's the safest way to protect your money. And that's what it's all about, protecting that money. NASDAQ, here's that lower line here. Now, the NASDAQ did not quite come down into that line as of yet. We saw breaks of all these areas here. 1780, I think, is the area we want to be watching once it gets below 1800, back to about that 1780 area. Otherwise, to the upside, you're going to want to be careful here. Just a lot of overhead resistance. Your safest bet, if you really want to be conservative, is back over about the 1860 area to the upside. Here it is on a daily too. Big volume, big red candle slicing back through all of this stuff we had been watching. Whether or not this is going to turn around and go back up is anybody's guess at this point. Now, we looked at the kind of the 60-minute wave, quote unquote wave patterns, and it sure looked pretty clean as a move. A 1, 2, 3. with this maybe being a 4. We don't know yet. That volume was one thing that was very peculiar. That was very, very strong volume to the downside. So we're just simply going to do what we have been doing, and that is wait for these lower levels to be broken before we go short and or above these levels to get long for the NASDAQ. From a weekly standpoint, look what we did. Came back up, retouched that upper blue line here that I drew in for this week, and you can see it hold, and now right back down to the 50-week moving average. Now we still have a lot of earnings left to get through, and some of the bigger dogs haven't reported yet. And usually things don't start to get back to a more natural move until we see things like Apple and some of the larger ones report. So it is what it is for the time being, though. We will continue to watch this. We are at just below that 50-week moving average. Let's see what we get for earnings this week, and keep in mind this blue line now above us from a weekly standpoint. SPX on a 60-minute also dropping here. We saw this beautiful consolidation. This is a textbook high base formation, and those are typically bullish. In this case, we did not get the break above 1100, so we did not get our entry to the long side. From the short side, here we are falling down here, coming back into 1060-ish area. Your next move to the downside for a potential trade is below 1060. Then maybe 1050, 1045-ish or so after that will be your support. Back to the upside. Anything between 1090 and 1100 is still in this kind of no-fly zone for me. But if you wanted to get aggressive, something over 1085 is a really aggressive place to get long. You'll want to keep your stops, maybe 8-10 points below that and just see what happens. But that would be the more aggressive place to get long. From a daily standpoint, this is what we saw last week. We got 2 holds over the 50-day moving average. I said this is setting up to look like, at this point, a high base. We saw it on the 60, we saw it on the daily, then of course Friday everything just fell apart on it. Broken formation at that point. Are we pulling back and then going to move up? Still hard to tell because of this heavy volume that we saw here. We are still looking for breaks. If you want to take that trade over 1085, this is why it's so dangerous. The 1090 is right above you. And then, of course, it's 1100 after that, so it is a very aggressive long play. Anything over 1085 is very aggressive. Otherwise, the more conservative is definitely over 1100 at this point then, and still below 1060 in my book for a short. From a weekly standpoint, you can see the line I drew in here as well on the weekly with the 50-week holding and this overhead blue line holding. Still slowly working our way down. However, this formation, for the time being, still overall kind of bullish. Just looks like a pullback at this point. We'll wait and see what happens over the next few weeks. But we see bigger moves down past 1,000 or down past 975-ish or so. And then I think that's going to end up breaking that bullish idea. VIX just consolidating sideways here. You can see it. Last week we had that, I said that divergence where the markets were kind of flat to up. VIX was also up. And then at the end of the week, we saw a decent move in the VIX, but not a huge move in the VIX. So if we take a look at the weekly, overall for the week, the VIX was up, 5%, whereas the markets, moved a lot on Friday. We just didn't see the VIX move a lot on Friday. So there's still indecision. There's still indecision about just how much fear is really pouring through the market right now. Apple on a 60-minute also consolidating. Once again, I really feel it's just waiting for earnings to be reported. If you want some speculative trades, you can go below 247.50 or back above maybe 257.50. I don't know. Very difficult right here. Be very cautious playing Apple over the next weeks until it reports. I think that's at the end of this month. Here's your bigger picture, and that is maybe above this 255.50 area or back below what I talked about before, 248.50 or so, 247.50 for shorts on Apple, but those have got to be, taken pretty quickly. Looking for, from a weekly standpoint, looking for breaks below this 247.50 area, and that is the 20-week moving average, which we've been pounding now for the last few weeks. FAS, big move here on Friday. You can see it coming down into here. I like trades below 20 to the short side or maybe above 22 to the long side. Same thing for me here on the daily as well. Back above 21, maybe 50, maybe back above the 20-day. So back above 21.50 for a long and back below 20 for a short. FAZ then, of course, moving upwards, back above 50, let's call it 16 bucks, be safe. Back above 16 for a long. And boy, I don't know, tough one here. Speculative trade would be back below 15.50 for a short, but you'll want to watch it, especially coming down into the $15-ish area. From a daily, same thing. Look how we're pounding our way against this blue line here. So back above that 16 is going to get us pretty close to back above all of this stuff above it, maybe 16.25 if you want to be more conservative. And then once again, below 15.50 for a short back into the $15 area coming into the week. All right, guys, there you have it. This is what we're looking at. I like the 1, 2, 3. Maybe this is a 4 before a 5 up. Still early to tell. Wait and watch, and let's see if earnings make any difference coming into the week. Take care and see you tomorrow night.